Welcome to Forex Simplified channel. This is lesson 1 of our free Forex course for beginners. By the end of this video, you should be able to know what is Forex and where does it come from? What is Forex trading? Major currencies in Forex. What is Forex and where does it come from? The word Forex is short for foreign exchange. It's the global market where currencies are bought and sold. Unlike stock markets, which are centralized and tied to specific exchanges like the NYSE or JSE, the Forex market is decentralized, meaning no single government or institution controls it. What makes Forex truly massive is its size. Over $6.6 trillion is traded every single day. That's far more than the stock market's $74 billion daily volume. Is Forex new? Not at all. Forex has been around for centuries, but for a long time, only the wealthy elite could participate due to high capital requirements. Think $100 million just to get started. What changed? The internet changed everything. Brokers moved online, increased accessibility, and lowered deposit requirements. Today, you can start trading with as little as $1. What is Forex trading? Forex trading is the act of exchanging one currency for another, buying or selling currency pairs like pound sterling to US dollar. The first currency in the pair is the base currency, and the second is the quote currency. If you think the base currency will gain strength, you buy. If you think it will weaken, you sell. Analysis basics. We'll cover this in depth later, but there are two main types of analysis. Fundamental analysis looks at a country's economic indicators like GDP, inflation, and retail sales. Technical analysis studies past price movements and patterns to predict future trends. Trading versus investing. Unlike investing, where you own shares and profit only when prices go up, trading allows you to profit whether prices rise or fall, as you're simply speculating on price movements. Also, the Forex market runs 24 hours a day, unlike most other markets that operate on 8-hour schedules. Types of traders. Scalpers. Quick trades, in and out within minutes. Intraday traders, no overnight positions, trades done in a single day. Short-term traders, hold positions for a few days. Swing traders, trades last weeks to a couple of months. Position traders, long-term trades held for 6 months or more. Major currencies in Forex. Here are the main currencies you'll encounter. USD, United States dollar, green buck. Euro, Fiber. JPY, Japanese yen. GBP, British pound, cable. CHF, Swiss franc, Swissy. CAD, Canadian dollar, loonie. AUD, Australian dollar, Aussie. NZD, New Zealand dollar, Kiwi. These are all issued by major central banks and are the most traded currencies globally. Market participants. From the top down, the Forex market includes central banks, brokers, commercial banks, exporters, importers, tourists, investors, financial institutions, and retail traders like us. Our next lesson is going to be about lot sizes, leverage, spreads, trading jargons, types of markets, and trading sessions. If you found this video useful, please do not forget to hit the like button, subscribe for future videos, and turn on the notification bell so you will be notified every time I upload a new video. See you next time.